Hi everyone, my name is Omar. In today's video, we're gonna talk about value-added tax. It's the third year since VAT is implemented in UAE. Most of the businesses in UAE have implemented VAT correctly. Businesses are spending hundreds of thousands of dirham to know about these things. In this video, I'm gonna tell you these valuable information free of cost. If you are making a taxable supply to a government office, you should not forget to charge VAT. There are some government departments and their services which are exempt from VAT, but your business is a commercial organization and your taxable supply has nothing to do with a government department. So if your supply is taxable, you should charge VAT. There have been some cases where charitable businesses ask commercial business owners that they are charitable institutes and they should not be charged VAT. But it shouldn't be the case, because your business is a commercial organization and your supply, if it's taxable, you must charge VAT to any charitable institutions. However, there is one special rule. If you supply a new building or lease a new building to a charitable institutions, only in that case you are not gonna charge VAT on your supply. But that's just one exception. Other than that, in all cases, you must charge VAT when you are making a taxable supply to a charitable institution. Another important point is barter transactions. If you are doing a barter with another company, in that case, cash doesn't change hands. But it doesn't mean that you shouldn't charge VAT. Both companies should charge VAT on their taxable supply. Invoice formats should be correct. There are two types of invoice formats in UAE. One is called simplified tax invoice, another is called full tax invoice. A full tax invoice is required to be issued when your invoice value is more than 10,000 dirham. In that case, if your invoice has more than one line item, like you are selling more products in one single invoice, then each line item should show rate of tax, tax amount, value before tax at line item level. If it's not at line item level, then your invoice is not valid. Generally, you can claim input VAT on your business cost. If your business is providing vehicles to your staff members and you want to claim input VAT on the vehicle expense, then you need to make sure that such vehicles are used wholly for the business use. If there is a small element of private usage, then you should not claim input VAT for the whole amount, because law is very clear that whenever the vehicle is gone for a private use, then recovery of input VAT is not allowed. There are some cases when vehicle is used for business purposes only, but when the staff take that vehicle back home, then there is an element of private use, and on such cases input VAT should not be claimed. Either vehicle should be parked at company premises to ensure that they are being used 100% for business only. You should not offset your expenses with the revenue and compute VAT on the net amount. It is very important that you gross up your revenues and you gross up your expenses. Whenever there is a case of offsetting your expenses with revenue, in that case there are chances that VAT has been computed wrongly. In case when there are multiple companies owned by a single group and they are not part of a single tax group, then supply of human services from one company to another is a taxable supply. Businesses can claim input VAT on the medical insurance of their employees, but not their dependents. Even though the cost of medical insurance of dependent is shared by company, companies are not allowed to claim input VAT on dependents' medical insurance. But this rule is different in Abu Dhabi. In Abu Dhabi, you can claim input VAT on the medical insurance of dependent of your employee. In Abu Dhabi, it's a local law which mandates that your employees' dependents should be covered under the medical insurance by the company. But in Dubai, it's not the case. So in Dubai, if your business is claiming input VAT on the medical expenses of your employee's dependent, then it should not be the case. In case of a deemed supply, you should account for VAT. Deemed supply happens when you say give gifts to your employees. In such cases, whatever the input VAT you have claimed on the purchase of such gift shouldn't be claim. There will be more VAT related tips coming on this channel, so stay tuned and thanks for watching.